The market is coiled, and the spring might be about to snap. Welcome to the weekly Market Wave Digest by Investing Angles, where every candle speaks, every Elliott Wave whispers, and we chart the turn before the herd even blinks. This week, volatility sits on a launch pad, ready for a big move. The dollar index is quietly cementing a key support, and bond yields are warming up for a decisive breakdown. TLT might finally be listening. We've already published a separate deep dive on commodities, from oil, gold, and silver to GOD, GDX, uranium, and the biggest oil names. Go watch that one after this. In stocks, the Russell leads the bearish charge with a slew of concerning technicals. Dow Jones and Transports look eager to explore lower territory. Nasdaq is resisting, but cracks are forming. And the SP 500 will take it apart from every angle. Waves, candles, indicators, sectors, and the big caps. Our feature of the week is the XLK technology sector. Live Elliott Wave analysis that might surprise you. Or might not if you were our subscriber in February. And if you missed Thursday's breakdown on Apple, Microsoft, Google, Goldman, and United Health, you'll want to catch up right after. And as usual, in our strategy section, we start with Volatility Index. Let's have a look at the candle map. So first of all, I'd like to say that the daily closure on Thursday wasn't exactly a bearish one, although it pushed the price below few important support levels, now resistance. Still, the candles are not fully bearish at this point. So far, it is a neutral combination here, and we would be looking for a confirmation, either bullish or bearish. So the picture on the volatility index futures are slightly better. So we had a potential setup for following three methods, but then the green candle wasn't very strong to reverse it immediately, and we might see another round of consolidation for 2-3 days before another green candle starts. That's the perspective on the daily. If we look at the bigger frames, as we discussed last week, the weekly candles were not very strong for an immediate reversal, and unfortunately this week they were not able to confirm a bearish path. And as you can see, they're still holding very nicely on the 8 weeks moving average, which is a yellow line here. And the most interesting thing start when we start to look at the bigger frames. For example, like 15-day frame, which is closing on Monday. This would be a very interesting one, and if it closes above this particular doji, let me mark a level here. So this would be a bullish closure, and this level is 25, 30, 45. Let's mark it here, 25, 45. If volatility futures close on Monday about 25, 45, this would mostly likely be a bullish path. It might not go there immediately, but and we might see some consolidation, something like this, for example. But the odds would be bullish on this frame. And if we look at an even bigger frame, the perspective for the monthly closure, a very similar picture here. So if volatility remains high until the end of the month and closes above the same level, this would be a bullish closure on the monthly frame with very high chances to continue increasing in the next months or even longer. And the final chart for volatility is this one that we outlined way back in April 10th. On April 10th, saying that there is a flag potentially forming and there is a chance for this particular target here. So right now volatility is in the target, and I think it has a chance to move slightly lower here, considering the structure of the wave here, which is potentially an impulse for wave C. If it moves slightly lower, might find the bottom here, and then we would be looking for this particular target. Note that this flag targets are still flexible until we see a clear confirmation of the bottom, so they might go slightly lower. That's the perspective for volatility. Now let's move on to the next subject of our discussion, is dollar index. If we look at the candles here, so overall formations and the trends are still bearish. However, the last 5 candles here, they most likely forming a solid bottom here. If the next candle, which is closing on Monday, fails to close at a new lower low below the low of this big candle, I would say that this potential bottom is solidifying here. And we can see a similar behavior on the 3-day frame, which also failed to close at a new low, and the same thing happens on the weekly frame. And most importantly, that all 3 frames are oversold, and we know historically that the dollar doesn't like being oversold. So I would say that the bottom is being formed right now. However, nothing is confirmed, and we need to see a strong confirmation candle in order to record a reversal. If we look at Elliott Waves, this is the chart that we shared with our subscribers way back at the end of March, saying there is a very good potential for the dollar to move down here to complete this particular wave. This is a snapshot from the Prechter's book about Elliott Waves, and typically this is our major guideline. So what we are seeing here, potential wave A, wave B, and now dollar is working on an impulsive wave C. And I believe it completed already waves 1, 2, 3, and 4, and is working on the final wave 5, which the most typical target for it will be somewhere between 96 and 98.3. So it has a little bit of room down there. So once we see a confirmation here, then it would be a very strong move upward. And this is our long-term chart that's been intact for almost 5 years. What we are seeing here is a potential strong bearish flag, a bullish flag here. Once we see a closure and the reversal, this will be the target, next target for the next big move, somewhere between 113, 120. That's the perspective for the dollar. Now let's move on to the bond market, and we will discuss it from multiple frames or from multiple angles. First of all, we'll look at the daily closure. On Thursday, all 5 yields that I monitor, 2, 5, 10, 20, and 30, they completed the day with bullish candles of various trends. And if we look at the 20-year, for example, or 30-year, these are strong inside up candles, which is an equivalent of bullish engulfing. And if we look at the weekly closure, for example, for this one, for 20-year, we're seeing after a very strong bullish engulfing, we're seeing a consolidating candle. It is an incomplete dark cloud cover, which is viewed most likely as a bullish continuation candle. So we might see a few weeks of horizontal move until the next leg starts upward. However, in the next leg, next candle can be strongly upward. And another frame that I would like to talk about is the 15-day frame, which is closing on Monday. So technically, if it closes at this level, it would be a confirmation of reversal, a big one. And the next one would be the monthly frame, which has also very good chances to close with a bullish candle. Maybe it would need to push it a little higher, but this is like a daily fluctuation. It's difficult to project it right now, but the generic direction is upward, and we would be looking for rates to continue to grow after April's closure. If we look at multiple frames at the same time, this is the 10-year yield. We are seeing a daily closure on bullish one. We are seeing the 2-day frame, which formed a strong 3 white soldiers, and this candle, as I expected, actually it wasn't able to confirm a reversal on Harami, and basically it confirmed the support here on 8 and 20 EMA periods. Now for 15-day closure, we are seeing a very strong, potentially ladder bottom, and very strong bullish engulfing of this doji. If it moves a little higher in the next day on Monday, it will be even stronger. Now let's have a look at another perspective. This is the spread 10-2 year. What we are seeing here is a bearish, very strong bearish candle, dark cloud cover, and it will be closing the next candle on Tuesday. So the next 2 days would be quite important for this one. If it confirms a reversal on this frame, well, that would be a very strong decision. And speaking about this particular chart, so far it is failing to form a strong impulsive wave, and I would be looking for completion of this diagonal. So far it's not confirmed, but once it does confirm, so then we will be looking for potential move and reversal below zero. Well, next chart we are looking for is 20-year yield at the short-term chart, 4 hours. What we discussed 10 days ago, that there is a potential of moving strongly upward and forming a wave. Now it looks like the yield decided not to explore the very strong path upward, almost vertical, and it is forming wave 2. Potentially, if it breaks below this green line here, the red path will be invalidated as 1, 2, 3, 4, 5. However, wave 2 will be here, and the wave 3 would start from there. This is a possible wave, and once we see a bottom, this would be the perspective. The next is the long-term chart that we've been tracking since December 2022 for 2.5 years, and there is a chance, very good chance, that the rates will grow higher. We have a strong impulsive wave of the bottom, and now it is forming a corrective wave 2. Whether it's complete or not, we will see very soon. If it forms an impulse, as I discussed in the previous chart, we would be looking for a very strong move upward, potentially starting wave 3. I think I have very concerning news for the Canadian compatriots. What we are seeing here is a potential ending diagonal for 5-year yield, and if it is completed, most likely it is completed right now, because the wave upward is very strong and a very strong impulse. Now we have a pullback in a corrective manner, and if we see another strong impulse, then we will be looking for a potential bigger impulsive wave of a higher degree, something like this. Well, we'll see. We are closely monitoring it because of great interest. And last week, the Canadian Bank of Canada didn't move their rate, and potentially it could be forming a bottom from the candles perspective on the bigger frames. If you're interested in more details, you can have a look at our weekly report that we posted a couple of hours ago for the dollar, for bonds, and for volatility. Now the next discussion is TLT. Obviously, let's start with the candles. So the TLT is bearish. Unfortunately, it's bearish. However, it has no chance, right? So if the yields are bullish, then the TLT must be bearish. And the closure on Thursday was with a bearish candle inside down. The week closed with an undecisive doji. It might have some bullish implications, but so far a very strong topping pattern here with a very strong bearish candle so far suggests that the odds are stronger for the bears. And this is 15-day closure, which is candle will be forming on Tuesday, and there is a very good chance, if everything remains like this, it will be a strong tower top. If it completes like this, we might see another couple of periods of bounce and then the move down. So far, this is bearish. And if we look at the monthly frame, it also potentially forms a very strong bearish candle. If it moves below if April closes below the February's low, it will be a confirmation of the move down. That's the candles perspective, and from Elliott Wave perspective, everything remains the same as we discussed it previously. We changed the date here, date 18. So far, we are seeing an impulsive wave down, and right now, TLT is forming either an ABC for wave 2 or wave 2 already complete here, and this is technically wave 1. This is wave 2, and we would be looking for wave 3 starting next week. So this wave has been either diagonal or a corrective wave. That's not very clear. We need to see a bigger picture. And if we look at the bigger frame, this is what we are seeing for TLT. The perspective that TLT formed in the impulse down here, and now it's working for a corrective wave 2. The next would be wave 3. That's the perspective. So it could also be wave C, but nevertheless it's a significant loss of value as an ABC correction here. So far, we are waiting for TLT to form the next wave down, and we will be moving from there. We will be analyzing depending on the wave structure and its character. All right, so that's been all for our bonds market, and now we will move to the next session. And we start our stock market discussion with Russell. This is the candle map and the closure on Friday. If we look at the daily candle, technically it is bullish, but I'd like to say it requires a big confirmation for this one. And we have a freshly made 100 over 200 days moving average bearish cross. So even if we see a rally here, I would say it will be limited by either 20, 50, or even 100 days moving averages. Most likely it's going to be 50, but let's see how it develops. The weekly frame failed to form a rally here, to form a bottom. And technically, these two candles are just the consolidation ones right now, bearish consolidation. we might see another small green one before moving lower. The biggest concern right now is the monthly closure. This is the monthly closure and this is the 2 months closure. So both candles are fairly strong, and it would require a lot of effort by Russell Pulse in order to reverse these candles. This is the candle map, but I'd like to show you another thing. So this is potential double top that right now is better seen on the 2 months frame or on the monthly frame. We had a fairly similar double top in year 2020, completed over a couple of years and starting in 2018 and ended in 2020. And the administration of this move was amazing. So technically, almost ideally, it formed the double top and target. So now we have a much bigger one. And it depends on how we measure it, whether we are measuring it by candles or by candles shadows. So in any case, so if this double top is formed, and for that we might need another candle, another strong candle over the next couple of months, we might see a move here towards 970, 850. And I remind you, it was 966, the low of 2020. So this is the perspective. Keep it in mind. Nothing is confirmed yet, but the chances are fairly high, especially if Russell closes the months with very strong bearish candles. Now let's move on to the next chart, and this is MACD. This is the monthly MACD. So far, everything is tracking nicely as we discussed it in the middle of March, and already Russell hit the target level between 14 and 1800s. However, I'm looking for a continued move down, particularly from the MACD perspective. The next chart is Elliott Waves, and this is something that is not very clear. If I looked at certain technicals, they are saying that wave 3 potentially is not done here. So this is the bigger picture so that you can see everything here. So we are looking for an A, B, C formation here. However, there is a possibility that this wave was wave 5 of a bigger degree, and we would be looking for the first wave A down. What I am seeing right now in the technical side, that wave 3 might not complete here, and it might drop towards this level, approximately 1500 or something. If this is the case, then we would be looking for a much stronger wave down, and it would be aligned, by the way, with a double top formation. But let's see how it develops. So far, it's already hit the target that we discussed way back in November 23rd. So the target remains the same, and we already perfectly in the area. So there is a possibility of a reversal here too. However, before the reversal, I would like, but actually Elliott Waves would like to index hit the lower low below the October 2023 low. It would be a much cleaner wave in that case. Well, that's the perspective on the midterm. If we look at the short-term perspective, this is the chart that we've been tracking since the middle of February, and perfectly hitting our perspective target for wave 3. Now what we are looking, this was the next iteration here. Once we hit wave 3, now we are looking for 2 or even 3 potential paths. First of all, the blue one is still on the table, and if we see a strong move, impulsive wave down, there is a possibility that this is just wave 5 of a bigger wave A. And if it moves a little higher, particularly if it crosses this red line, then we would be looking for possible B wave extended B formation. However, I'd like to say that there is also possibility that the very first wave of the bottom was impulsive, and if we see an impulse here, there is also a chance for a bigger impulse. However, considering the technicals and considering candles, I am highly skeptical about this impulse at this moment. So the either blue or red path have much higher probability. Now let's have a look at the long-term frame. This is the chart that we last updated in January, saying that Russell is done and it is expected to move down. This is exactly what it did, and right now it is in our target area. However, again, there is a possibility that this is a green path, but it's also a chance that this is a blue path Russell is forming, and I'm talking about this one. So that wave, the very first wave of the top is wave A, then we would be looking for wave B as a consolidation. However, it can be short because of a potential very sharp zigzag, and now we would be looking for another wave C to complete this scenario. So that's the perspective for Russell, and I would like to say that it is the most bearish at the moment among all four indices that I'm going to discuss: Russell, Dow Jones, Nasdaq, and S&P 500. And we know from history, from experience, that Russell usually leads the pack and consider the harbinger of major market moves. Let's see if this develops this time, if this strategy works for us. Now let's move on to the next index, and we will be talking about Dow Jones and Dow Jones Transportation indices. As usual, we start with candles, and the candles are not rosy at all. So they are bearish, and a freshly made 50 over 200 days moving average bearish or death cross. Candles are falling down on the daily frame. Dow Jones on the weekly, technically it broke through the 50 days moving average, and it had a chance to lift here with a piercing line. However, this last week candle technically put a cap on this move. So right now it's kind of neutral, leaning bearish. Let's see how it develops further. The important thing that we need to watch is the closure of the 15-day candle on Tuesday. So technically this candle, the red candle, can be transformed into a bullish one. However, Dow Jones needs to have about 9.5% in the next 2 days in order to avoid bearish closure, which is a very tall order, and considering technicals, it's highly unlikely. And if it closes with 15-day frame with a bearish candle, it will technically open a path for the monthly bearish closure with a candle like this. Well, so far the candles say Dow Jones is bearish. Now let's start looking at the Elliott Wave. So this chart was shared with our subscribers on December 8th. And we were saying that Dow Jones potentially formed a highly unusual but still an ending diagonal, and it has a very good chance to return to 37.611.56. And now this is the same chart. This is the same chart. And I'm saying that the target was hit perfectly, and even surpassed it a little bit. Now it's bounced, and I would be expecting it to continue further down. I'm highly skeptical about this red path that I outlined back then in November. Let's see how it develops. Again, so this was chart made in November. Now let's move on to the next one. This is our long-term all-time chart. This is the one that was completed in January 3rd, saying that Dow Jones most likely hit the top with a few bearish candles, and now it has a chance to return toward 36 or even lower. And at that point we were discussing 36 as a lucky path. Well, Dow Jones is not far away from the target here, and I would like to emphasize this particular overlap that Dow Jones moved above the high of January 2022, technically invalidating an impulse, a continued impulse down. Now, the better chances, better probability is for the path down, and it can explore not only the blue rectangle but the red one also, depending on the next moves. Now, let's have a look at the next moves. So this is the chart that we've been tracking for a while, since March, and now what we are seeing here is the potential for an impulse, and this impulsive wave could be complete already. However, at this point I can also consider this particular wave, which could also be an impulse, and if it happens, it would be an impulse for wave A. Well, that's another perspective. Let's see how Dow Jones develops. So far, there is no overlap here, and the wave is perfectly impulsive. So if this is the case, then we would be looking for a bigger wave B, or wave B could already be started. Depends on how Dow Jones moves next week. So this would be either wave B, wave 2. Well, that would be a very huge impulse. I highly doubt it's going to happen. However, I'm just keeping this for a reference. So the two most probable paths right now are either A or B, depending on the next week move. Now, if we look at the technicals, this is MACD bearish cross that Dow recently made. And if it closes the month like this would be technically the cross of the same magnitude that it did in 2022. And after that cross in 2022, Dow Jones lost about 22.5%. Well, I think if it goes by the same standards, 22.5, we would be looking approximately at 34.7K for the index over some period of time. So the previous decline lasted from January till September, so 9 months or maybe longer. This is our expectation. So far, it's been just 4 months, another 5 months potentially for the Dow Jones to find its bottom. And the final discussion here is Dow Jones Transportation Index. So far, the chart that we outlined back in November, in the middle of November, the chart remains the same. No changes to it. I just added the targets. And the last update was in the middle of February when we said that Dow is about giving you a gentleman's exit, Dow Jones Transportation. So now take an action. So far, Dow Jones Transportation hit, what was it? About from the top, it was about 30% loss. But so far, the wave here is corrective, and after certain consolidation, perhaps which would take several weeks, I think, we might see another decisive wave down. That's the perspective for the index. Now let's move on to Nasdaq. And obviously we start with candles. So far the daily is somewhat bearish neutral, but there is a possibility of a bounce here depending on the next day move. The weekly formed a very nice piercing line. However, the last week was with a dark cloud cover and complete dark cloud cover. So technically this combo is leaning to the new neutral, slightly bullish. Well, let's see how Nasdaq administers it. However, while it managed to form some somewhat neutral bullish candles on the short-term frames, the long-term frames continue printing bearish candles. The 10-day frame last week formed a bearish continuation candles, flipped 8 by 20 EMA, and now if we look at the 15-day, sorry, that's the wrong one. If we look at the 15-day frame, there is a very good chance that it is closing with a bearish continuation combo as well. Oh, this is the 15-day frame. I got it prepared. So far, in order to reverse it into a bullish one, Nasdaq needs 7.8% in the next day, on Monday. This is for the futures. Well, that's a tall order, and I'm highly skeptical about this perspective. Now let's move on to MACD, and this is what we are seeing here. This is the chart that we shared at the beginning of March, saying that Nasdaq is about to hit MACD cross, made a bearish MACD cross on the 15-day frame, and now it is looking for a confirming bearish MACD cross on the monthly frame. So far, no surprises here, and it is slowly moving down. A very ballpark estimate brings it to about 13.8K. That would be our expectation, and that would be somewhat similar to what Nasdaq did in 2022, also lasting for about 9-10 months. If we look at the chart that we discussed, Elliott Wave chart, longer term, that we started discussing way back in November, saying that Nasdaq is getting very close to its stop, and we started to see deterioration in technicals. So far, this is the chart. This is how we are looking at it. Potentially, Nasdaq formed at the very first wave for a bigger correction, which would be ABC. At this point, it's not clear what kind of wave it is. We'll discuss the longer term perspective after the monthly closure, once we know the monthly 2 months and 4 months prints, so they would help us to understand where Nasdaq is going in the long run. And if we look at our midterm chart, so far we are looking for potential completion of an ABC corrective wave, and another wave would be wave B, potentially a zigzag. But right now, what we can say that the wave upward has been corrective, and in our case, we would be looking for a lower low, one way or the other. And this is the micro chart that we've been tracking with our subscribers on a daily basis. This is how it started on April 12th, and so far it develops fairly nicely. So far it's been corrective. Whether it forms a move, whether it forms an impulse down or it resolves for a bigger wave C, technically it doesn't matter, because we would be looking for a lower low anyway. That's a Nasdaq. Now let's move on to S&P 500. So this is the candle map. We are seeing pretty similar candle formations. A somewhat bearish neutral on the daily frame with a freshly made 50 over 200 days cross. The weekly is somewhat neutral, leaning slightly bullish, but we need a strong confirmation in order to make this happen. But again, like the other indices, a 15-day frame candle is closing for the futures on Monday, and the S&P 500 needs to rally about over 7% in one day in order to reverse it into a bullish one. And the monthly so far is tracking for bearish closure. Similar scenario for the MACD bearish cross, monthly MACD. If we consider it is going to be a repeat of 2022, well, then in this case, S&P would be heading towards 4,300, somewhere in this area, and possibly we'll find a support at the 100 months moving average, which is a purple line here. Now, if we look at the bigger frame, Elliott Wave perspective, this is the chart that we shared at the beginning of January. So far, it remains absolutely the same. We see that index already hit the target area, and right now it's hanging just by a hair above the must not cross line, 4818.62. If it crosses this line, then it will technically invalidate the potential green impulse here. Let me visualize it for you. So this would be 1, 2, 3, 4, and 5. So this potential impulse would be invalidated if S&P moves below 4818.62. And we would be looking for purple path. It's not necessarily going to take us 10 years, like I said here, but perhaps a year, maybe 2. It would be definitely condensed in time. Now let's have a look at the next one. This is our midterm perspective. What we are seeing, this is what we are tracking for a while. And what we're seeing here, potential completion of the very first wave A, B, C down, which would be wave A of a bigger correction. Or like similarly to the Dow Jones, there is also a possibility of a bigger impulse down, 1, 2, 3, 4, 5, as I charted here in blue, and this would be wave C of a bigger correction. And then once we have wave A, we might be looking for months or 2 of corrective action, possibly up and down, for wave B before the next wave launches down. Speaking at the short-term frame, at this point, it is not very clear whether S&P already completed the red flag, bearish flag, or it is going for a green one, like I marked here. So it might be a bigger bearish flag. The same ABC formation, and these would be particular targets for this move. Now let's have a look at the sectors. Let's see what they are telling us, what kind of support we have. Financial, technology, healthcare, consumer discretionary, industrial, staples, utilities, and energy. Out of these 8, only the staples closed the week with the bullish candle. All other, unfortunately, well, maybe financial, but I wouldn't bet on it until I see a strong confirmation. So technically, all other are bearish or strong bearish. So if this is the case, so the staples wouldn't be able to lift the index on behalf of everyone. So the chances from the sector's perspective for the next week are somewhat bearish. And if we look at the large caps, what they are telling us, the weekly closure is technically bearish. And I already discussed some of them, like Microsoft, Apple, Alphabet, and a few other in our Thursday's video, so you can watch in details Elliott Wave perspective and technical perspective for these V3 and also United Health and Goldman Sachs. What we are seeing here is a very strong bearish closure for Microsoft. If we look at the bigger frame, 15-day, most likely it is closing with a bearish continuation candle tomorrow, not tomorrow, on Tuesday. And if we look at the monthly frame, it's also on track for a bearish closure. An even bigger frame, like 2 months frame, most likely it is going to confirm a top on that frame. Somewhat similar is happening for Amazon. Also for a strong, it is shooting for a strong monthly closure. And if I'm not mistaken, Amazon might even form 3 black crows on the monthly frame. If we look at NVDA 15-day is going to be bearish no matter what. I think that in order to make it bullish, NVIDIA needs to rally, well, 30% in the next 2 days. Let's call it impossible. Everything else, everything short below the previous candle high will be bearish. And speaking about NVIDIA's monthly frame, most likely it will be bearish, and the 2 months is also on track for bearish closure. What is happening with Tesla right now is Tesla is bearish, and the 15-day frame is just reconfirmed that Tesla is going down further. This is a very strong tower top formation here on 1, 2, 3, 4, 5, non 6 candles, and now we have 2 consolidation candles here. Maybe we might have another one for another 15 days, but after that I would expect Tesla to go down, perhaps towards double-digit prices, even though it looks and sounds very unusual. But this is just the candle's estimate. Well, that's the perspective from large caps, and as you can see, they are saying that the chances for a move lower in the short, mid, and long-term frames is significant. And the final discussion of today, I'd like to talk about the technology sector, and it might surprise many of you, but those who were our subscribers back in February, they shouldn't be surprised at all. That's just another reason to hit that subscribe button, to ensure that you always know what is happening and you're always aware of our calls. So this was the chart that we shared with our subscribers back in February 16. So this is the same chart on April 19th. So we are seeing that it is right now in the target area, the technology XLK ETF. And the next wave, I would expect it to be a continued wave B. Maybe it might take a couple of months. At this point, we don't know, but let's see what happens on the other frames. So far, this is a long-term perspective for us. This is another chart that we shared on February 16 when this was more clear one, and we were saying that XLK was forming a big ending diagonal, and one more wave was required at the point to complete it here on February 16. And now what we are seeing when it was 240 here, and we outlined the target for the ending diagonal. The origin of it was 190. So XLK surpassed it, and right now it is trying to climb above this particular support line. However, something tells that it might not find sufficient support. Well, that's the midterm, and now let's have a look at the short term. Let's try to do it together. So this is the chart that we called on March 25th when XLK was about to complete the bearish flag. So what we are seeing here is now okay, I'll just remove some unnecessary elements. So there is a possibility here. So once we might have wave 1, 2, 3, 4, and 5 here. And in our case, it would be wave A of a bigger formation. Or honestly, I'm not quite convinced that this is an impulsive structure here. And I would be looking for another perspective, and most likely I would say that this looks like WXY formation for wave A, not exactly an impulse. And once we have this particular structure, so this also could be an ABC of wave A, just to keep this another perspective, an ABC structure, so it's like a zigzag down, which also makes sense because this is an ABC formation here and another ABC formation here, so potential for a zigzag. Now what we're looking for is a wave upward. Clearly this wave has been corrective, so let's remove this one for now, and possibly it is forming a bearish flag here, and I would say it is rather nicely outlined. So once this is complete, we might see either continued move down, something like this from this level, like an immediate move down, or it could be another hit higher and move here. So I'm just exploring different paths here. So that's another perspective. So, and however, now let's have a look at the length of this wave. So this wave has been long, and it took, let's measure it. So it lasted 44 days, 46 days technically. So from Elliott Wave perspective, the next wave, the corrective wave of a bigger correction, ideally should be longer than this one. And as this zigzag or this flag is somewhat short, I would be expecting another wave bigger than that. For example, something like this. This would be A, B, C. Just I need to change to different degree. So this would be wave A, this would be wave B, and somewhere down there would be wave C after this complete. And this wave ideally should be lasting longer than 46 days. That's the perspective from Elliott Wave timelines. However, it's not necessarily the case, so that wave B could be shorter, especially in very decisive markets. So far, let's see what happens. The most important message here is that the wave upward is corrective. This is fairly clear, and we would be expecting a lower low one way or the other, whether it takes this, let me change it to different color, whether it takes an immediate green pass down. In this case it would be wave A in green, and this would be wave B somewhere here, very short one. It's also possible, however, I would say that the probability right now with either blue or the red path. So either green one or the blue one or the red one, all paths would be looking for a lower low here. That's the most probable outcome of this discussion. And now the final, I'd like to analyze the candles, something that we discussed way back in February and March. So far, the daily candles are bearish and the chances for moving lower are stronger. The weekly is kind of neutral. The weekly is kind of neutral. And I would like to say a few things about the weekly frame. So this is something that we discussed way back in at the end of February, when XLK completed 3 black crows here, and I was mentioning that it was one of the strongest black crows in the history, and the previous one I was able to find on the, it was in year 2000. XLK formed also crossing three black crows, crossing over 50 weeks moving average, something that happened right here. And I'd like to emphasize that then in 2000, from 2000 to 2003, technology sector lost 82%. So if this happens now, I projected it here, 82% would be right here, and the price would be $43. Well, with the current 192, it's hard to believe. Anyway, this is the projection, this is the statistical analysis. Let's see how it plays. So far, the candles are not quite conclusive here. However, if we look at the bigger frame, 15-day frame, for example, it is strongly bearish and it is unlikely to change in the next couple of days. Speaking about the monthly frame, something that we discussed way back in the middle of March. So far, it is striking down according to our estimates. Let's see whether it hits 160. It was our projection at the time. I would say that 145 is more probable at this moment. However, we need to see how it develops, particularly at the end of April. Well, that wraps up our discussion, and I'd like to summarize it. This week's signals were loud, even if the market pretended to stay calm. Volatility is set to spring. DXY is defending its floor. Yields are ready to move, and TLT just blinked. Russell and Dow are tilting bearish, Nasdaq is showing cracks, and the S&P 500 is at an inflection point. XLK's wave map could rewrite what tech traders expect next. If you're serious about trading and done chasing headlines, subscribe now. I cut the noise, chart the turns, and focus on the signals that matter. For daily high conviction setups, Master Trader Kyle is in our private Discord dropping surgical entries and exits. Want full access to analytics, Elliott Waves, candle signals, and multi-frame strategy? Join us at investingangles.com, where structure meets precision. Like, share, and pass it on, because timing is everything, and the turn waits for no one. Until next time, stay sharp, stay objective, and remember, at Investing Angles, we chart the turn before the herd even blinks.